Silver is doing something right now that it has not done since 1980. Not the price, the speed, the way it moves. If you own an ounce of it, you have felt it in the last little while, that lurch in your stomach. Because silver just got knocked down hard into the mid 50s and then came clawing right back above 60 in a matter of days, and gold barely blinked while it happened. That kind of violence, that near vertical, breathtaking rate of change in a metal, the last time it looked like this, a lot of the people watching me were young men and women with their whole working lives still ahead of them. And here is why that should matter to you, and not just fascinate you. Because the last time silver moved like this, it ended in one of the most brutal wipeouts in the history of markets, and the people who got destroyed were not fools. They were right. They were right about the shortage, right about the direction, right about almost everything, and they were annihilated anyway. So if you are holding silver today or thinking about it, the single most important thing you can do is understand exactly how that story actually ended, because the Rhine is uncanny and the difference is everything. By the end of this, you will be able to look at what silver is doing and tell the one thing that separates a rhyme with 1980 from a repeat of it. That is the whole game. And there is one detail, the one factor that decides which way this breaks, that I am holding back until the very end, because it is the part the loud voices on this platform will never show you. It does not fit on a thumbnail. Stay with me, and you will have it. So come back with me. Go back to the end of the 1970s, and let me introduce you to a man, an ordinary man, because his story is the whole lesson hiding underneath that number on your screen. Call him Frank. Frank is a machinist in the industrial Midwest. 50-something, thick hands, a lunch pail, a mortgage nearly paid off, a couple of kids he put through school. And Frank has watched all through that decade the money in his coffee can lose its meaning. Prices at the pump, prices at the grocery, the raise that never quite catches up. Inflation is not a statistic to Frank. It is the reason his wife stopped buying the good coffee. And Frank has noticed something. Silver is moving. Through that whole year leading into 1980, silver has been climbing. Single digits, into the teens, into the 20s, and then it goes near vertical. It starts to move in a way that ordinary metals simply do not move. And Frank, standing at his workbench, thinking about that coffee can, does a very human thing. He decides to protect himself. He drives down to the coin shop on a Saturday, and there is a line out the door. A line. Working people, retirees, a dentist, a school teacher, all of them clutching cash, all of them having the exact same thought Frank is having, that the paper in their wallet is melting and the silver in that case is real. Now hold Frank there in that line, because I need you to understand what was actually happening above his head in a world he could not see. Two brothers, the Hunt brothers, sons of a Texas oil fortune, had decided that silver was the one honest asset left on Earth, and they had set out to own it. Not paper claims on it, the metal. And they bought and kept buying, on borrowed money, taking delivery of physical silver by the trainload. And as they did it, the price went parabolic. Silver ran toward $50 an ounce. And here is the number that should make the hair on your arms stand up, because it is the same number you are watching move today. The gold to silver ratio. How many ounces of silver it takes to buy 1 ounce of gold, compressed all the way down toward the mid-teens. Silver got so strong, so fast relative to gold, that 1 ounce of gold bought barely 15 or 16 ounces of silver. That is the tightest that relationship has been in modern memory. Euphoria. Frank felt like a genius. The line at the coin shop got longer. The newspapers ran the story. Everybody knew somebody who was up big. And Frank was right. That is the part one need to land on you, hard. He was not chasing a fantasy. Silver really was scarce. The demand really was real. Everything the true believers said about the metal was, in its bones, correct. And then, the rules changed. Not the fundamentals, the rules. The exchange where silver is priced, watching this parabola, watching two brothers corner the entire market on borrowed money, did something that had almost no precedent. It changed the terms of the game mid-hand. It brought in what became known as Silver Rule 7, and it essentially said you could no longer buy silver on credit the way the Hunts had. You could only sell to close positions. In one stroke, the biggest buyers in the market were forbidden from buying. The bid the thing holding the whole tower up, was pulled out from underneath it. And silver did not drift lower. It collapsed. It fell off a cliff, and it kept falling. And the Hunts, who owed fortunes they had borrowed, got hit with a margin call for hundreds of millions of dollars they could not meet. The men who cornered silver were bankrupted by it. And the price that had touched nearly 50 on its way to the moon spent the next 20 years grinding down into the single digits. And Frank, in that line, buying near the top because that is when the line forms, watched the thing he had done to protect his family cut roughly in half, and then worse. And he sat at his kitchen table with the newspaper that had called him smart now calling him a sucker. And he did the math, and this time the math said he was a fool. He was right about everything that mattered, and he lost anyway, because a claim is not a metal, and the rules under your savings are a policy, not a law of nature. Now stop, because this is exactly the moment where a decision quietly sits, especially for you, if you are the person this channel is really for. If you are sitting on $100,000 or more in a retirement account, a 401k, an IRA, something you spent a working life filling, then a moment like this, a metal moving violently while everyone around you is either euphoric or terrified, is precisely when the difference between owning something real and owning a paper promise on it turns out to be the entire ballgame. Frank's whole tragedy was the gap between the two. So I put together a free retirement protection guide for exactly this reason. It walks through, in plain English, how some retirees are moving a portion of their savings into physical gold and silver without triggering taxes or penalties, held inside the tax-advantaged account they already have, metal they actually own, rather than a number on a screen that somebody else can freeze or rewrite. If you are watching this on your TV, just scan the QR code on your screen. If you are on your phone or your computer, go to jeffreedguide.com. And if you go through it and want to talk it over, there is a free, no-obligation, one-on-one educational session for folks with $100,000 or more in any retirement account. No pressure, nothing to buy, just answers. All right, back to the story, because now we get to the part that actually matters to you. Here is the rhyme. Look at what silver is doing now against what it did then, and the resemblance is genuinely unsettling. The rate of change is the same character. Silver has been climbing sharply over the past year, up strongly, moving with that same violence in both directions, overshooting down into the mid-50s on a shakeout, and then overshooting right back above 60, the way only silver moves. And the ratio, that same tell, is doing the same dance it did in 1980, just earlier in the move. It stretched out into the 70s when silver got hit hardest, and it has been easing back into the high 60s as silver has outrun gold on the way up. Still stretched, still a long way from the mid-teens of 1980, but starting to close, starting to compress. And compression happens exactly one way, by silver leading. That is the same signature, a metal going near vertical while the ratio tightens. We have seen this movie, and we have seen how it can end. So, am I telling you to run for the exits? No. And this is where I need to slow down and be very precise with you, because the difference between then and now is not a detail. It is the whole thing, and almost nobody making these videos will say it plainly. Here is the part that actually changes the story, and I want you to lean in, because this is the hinge the entire video turns on. In 1980, the move was built on a corner. It was two men and their borrowed billions. The scarcity was real, but the price was being driven by leverage, by paper, by credit, by a buying pressure that existed only as long as the loans held and the rules stayed the same. It was a tower of debt with metal at the very top of it, and the instant the exchange forbade buying on credit, the tower had nothing under it. The whole thing was standing on a single, fragile assumption that you could keep borrowing to buy. Change that one rule, and it fell. That is why it collapsed so completely. It was never really about the metal. It was about the money financing the metal. Now, look at what is underneath silver today, and it is a completely different foundation. It is not two brothers with a line of credit. It is a structural, physical shortage that has been building for years. Silver has run a deficit for 6 straight years now, the world using more of it than the mines bring up, year after year after year. And the gap has been filled by draining above-ground vaults, hundreds of millions of ounces pulled down to cover the shortfall. And here is why that is so different from a corner. Nobody can change a rule and make that shortage disappear. There is no Rule 7 for a deficit. You cannot pass a regulation that conjures silver out of the ground. Because most silver is not even mined on purpose. It comes up as a byproduct of digging for copper and lead and zinc, so no miner opens a pit because silver got expensive. And you cannot regulate the demand away either, because a solar factory cannot redesign its panels overnight to skip the best electrical conductor on the periodic table. And every device around you uses a little, and most of it is used so thinly it is never recycled. It is consumed and gone. Gold gets hoarded. Silver gets burned. On top of that, China is pulling record volumes of physical silver right now. Imports surge to a record. Inventories drawn down hard enough that at the stress point, silver inside China traded at a steep premium to the rest of the world. And the people who moved the most metal on Earth kept buying right through the shakeout, while the paper traders in the West were panicking. Do you see the difference? In 1980, pull one lever and the buying stops. Today, the buyer is physics. The buyer is a factory and a solar panel and a nation that needs the metal and cannot make more of it appear. That is not a corner you can break with a rule change. That is a shortage that only a much higher price can eventually solve, by forcing demand down or supply up. And silver's supply barely responds to price at all. So the rhyme with 1980 is real in the rate of change. But the thing underneath is the opposite. One was a tower of debt. This is a floor of stone. And that, right there, is why a growing number of serious analysts are no longer laughing at big numbers. Let me be careful and honest about this, because this is where the loud voices lie to you, and I will not. When people put targets on silver, triple digits, 100, 150, some reaching toward the low 300s, they are almost always doing one of two kinds of math, and you deserve to see both so you can judge them yourself. The first is the ratio math, and it is pure division. If gold simply holds where it is, back over 4,100 at a multi-week high, and if that stretched ratio compresses back toward levels it has actually visited before, then silver's implied price is just gold divided by that smaller number. Compress it toward 40, and the arithmetic points to the low three figures, around 100. Compress it toward 30, and you are in the neighborhood of 130 odd. And take it all the way to the mid-teens that 1980 actually printed, with gold where it is now, and the same division spits out a number well over 200, up toward 250. That is where those eye-popping targets come from. Not from a shout, from division, using a ratio that history has genuinely visited. The second kind of math is the deficit, stacked on an inflation-adjusted floor. Silver's 1980 peak, adjusted for everything the dollar has lost since, is worth well into the triple digits in today's money, by common estimates. So for silver merely to reclaim the high it already set once, corrected for the shrinking dollar, it would have to more than double from here, doing nothing new at all. That is the floor the serious voices start from, and the 6-year deficit is the engine on top of it. When two completely different methods, the ratio and the deficit, point at the same neighborhood, that is when a number stops looking random. But now I have to draw a hard line, because you will run into the other stuff. There are voices out at the far edge calling for $1,000 silver, or $50,000 gold, or some clean 30 times multiple. And I am not going to insult you by pretending those come from the same honest place as the ratio math. They do not. Those numbers come from imagining a complete monetary reset, a dollar rebuilt from scratch on the gold in the vaults, and then applying an old ratio to that reimagined world. It is a story about the end of the financial system, not about next year. The bigger the number, the more it is assumptions stacked on assumptions stacked on assumptions, and the more skepticism it has earned. I am laying out why those people argue what they argue so you understand the whole spectrum, not because anyone alive can hand you that number, or a date. And that brings me back to Frank, and to the one thing I promised you at the very top, the factor that decides which way this actually breaks. Because here is the honest truth, and I want it to land, because I cannot say it often enough. I cannot promise you a price, and I cannot promise you a date, and the moment anyone does either one, you should close their video and never come back. Silver is the most violent major metal there is. You just watched it flush into the mid-50s and snap back above 60 in the span of days. And it can turn around and do the ugly version just as fast. It could stay cheap for longer than you can stand. It could fall back well below where it just broke out from before any of this case ever plays out. A few good days off the lows is not a confirmation of anything, and the reason it is not is sitting in the chair the Federal Reserve occupies. Under Kevin Warsh, that Fed has turned hawkish, with a rate hike on the table instead of a cut. And metal that pays no interest always struggles when rates threaten to climb. The deficit is the trend. The Fed and the dollar are the weather. And the weather can soak you for a very long time before the trend ever shows up on your doorstep. Being right and being early feel exactly the same while you are holding, and only one of them ever pays. So what is the one factor that decides whether this rhymes with 1980 or repeats it? It is not the price. It is not the ratio. It is whether the thing driving silver is borrowed money or real scarcity. In 1980, it was borrowed money, a corner financed on credit, and credit can be cut off with a rule, which is exactly what happened to Frank. Today, it is a physical deficit that no rule can touch. That is the difference between a bubble and a shortage. A bubble pops when the financing stops. A shortage only ends when the metal shows up, and the metal is not showing up. That is the tell the thumbnail sellers will never put on the screen, because it is not exciting, it is structural, and structure does not trend. But it is the only thing that actually matters. Which is exactly why what you do about your own position matters more than any target. This is not advice, it is just how a calm person thinks. First, own the metal, not the promise. The entire difference between the people who survived 1980 and the people who got wiped out was whether they held a real thing or a leveraged claim on it that somebody else could yank away. Frank's tragedy was leverage and paper. Do not repeat it. Second, size it so a brutal drawdown cannot force your hand. If a fall like the one Frank sat through would force you to sell at the bottom to pay a bill, your position is too big, no matter how right the thesis is, because being forced to sell in the valley is how right people still lose. And third, never sell into the shakeout. The shakeout is the machine that transfers metal from the people who feel to the people who own. Do not be the fuel. And if you are on your TV, the QR code is back on your screen one more time. If you are on your phone or your computer, go to jeffreedguide.com. It costs you nothing to be informed, and the honest reason to look now is not fake urgency. It is the plain fact that the time to think a decision like this through calmly is exactly when nothing feels urgent, which is right now, not the day everyone is panicking in a line out the coin shop door. And for those of you who stay with me all the way to the end, here is something just for you. If you have $100,000 or more in any retirement account, and you mention that you watched this full video, you can claim a free, one-on-one, no-obligation educational web conference. A real conversation about what you actually own versus what you think you own, no pressure and nothing to buy. That is for the folks at that level who made it all the way here, and you were one of them. So could this video sit under some other title? No. You came to understand what silver has not done since 1980, and now you have it in your own hands. The rate of change is the rhyme. The corner versus the shortage is the difference. And the lesson of the man who lived the real thing is the only sure thing in this entire video. Frank held some in the end. Not because he was brave, he told his kids years later, but because he was too stubborn to sell at the very bottom. And stubborn turned out to be enough to still own it when it finally mattered again. The truth he learned the hard way is the one I will leave you with. In 1980, they changed the rules, and the tower fell because it was built on borrowed money. This time, there is no rule to change because it is built on a shortage. That does not promise you a price, and it does not promise you a date, but it tells you that if you are going to own the metal, own the metal. Size it so you can survive the middle, and never, ever be the one standing in that line at the top or selling in a panic at the bottom. Do not just be right. Set your life up so you are still standing to see it pay.